The S&P 500 flashes a sell signal on Friday, and as we've seen, Bitcoin breaking above $100,000. Is there too much complacency in this market? We're going to talk about that and a whole lot more in today's video. Now, before we go ahead and cover what the sell signal was, let's take a look at some of the warning signs we have out here in the stock market. For instance, we see the S&P 500 at all-time highs, so there should be nothing to worry about, right? Come on in, the water is warm. When we look at SPY versus HYG, notice recently, SPY up here in the upper pan of the chart, as it's making new all-time highs, is HYG making new all-time highs? High yield bonds, the answer is absolutely no. We come over, we look at the Dow Jones versus the transportation index. We saw the transportation index starting to come back quite a bit. Then we're also seeing the yield curve trying to reinvert. However, that's not the whole story out there, because when we come over, we look at the volatility index, the VIX, we are now sitting at 12.76. On Friday, you can see it just gap lower and continue to go lower and lower out there. But as the VIX is going lower, which shows us there's no fear in the market, we look at the fear and greed index and we can see as the market was making new all-time highs, the fear and greed index actually moves closer into neutral, and now we're in neutral. Earlier this week, we were sitting at 69 on the fear and greed index, and now we keep going back the other way. We also look at the most recent investor sentiment survey. We had a very bullish reading at 48.3. Again, that is also going in lines with too much complacency in the market. We see this article right here, Bitcoin over 100,000, Dow above 45,000, and that's all everybody talks about. New all-time highs. New all-time highs. The market can never go down. But during the live stream this week, we came back from lunch and the NASDAQ came down, dipping a little bit right here, and everybody was freaking out. Was there some type of news? Did I miss something? Why is the market going down? And again, all those comments within the chat was another telltale, too much complacency out here in the stock market. Now, if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Now, when we look at the S&P 500, look out here on Friday, we have a little bit of an inverted hammer. We went up, we closed below the 50% of the range. Yes, I know we have an ABC pattern completion up here at 616. But then if we come over and we look at the equal weight S&P 500, this is starting to show signs. This is showing us there is a lot of cracks out here in the stock market. For instance, we've been able to come back over and fill the gap right over here. And we can also see that we've had 1, 2, 3, 4, 5 consecutive down candles in a row. Then when we go ahead and we compare that to the SPY, we do not have anything of the such. For instance, Friday's candle was still able to close higher than where that candle had opened. Then if we go over and we turn on the DeMark 9 count sequential indicator, what do we get? We've already got a 9 count. What does that signify? That signifies exhaustion in the market. What normally takes place once that occurs? Either we get a sideways consolidation market or we start to pull back here just a bit. Now, if indeed we do start to pull back this week, this prior swing point right over here at about 600 would be a point of interest I want to focus on, along with this high volume area at about 598.44. If we start going much below that, then I want to go ahead and pull my fibs, measure from that last swing low up here to the swing high. We know the S&P loves to retrace a 50% retracement, and if we only retrace 50%, that could be still considered a minor retracement in what could still be a very bullish phase of this market. Now, when we come over and we start looking at, let's say, the footprint charts, and more specifically, I want you guys to pay attention to the delta numbers, and this is going to be important. As we've had to move up, I want you guys to pay attention to sequential declines with the delta. But first, let's rewind before we talk about the sell signal. For instance, last time we had a buy signal, we can see the SPY was starting to come down. And I want you guys to pay very, very close attention. We had 504,000 on the delta. Then we had a negative 302. Then we had 1 million. Then we had 408. Then we had 408,000. Then 487. Right here, when we had this 487 delta, once we break the high of that candle, that gave us the buy signal on the way up. Now, if we go ahead and we look at how this is setting up right now, we almost had a sell signal just a few days back. And let's rewind this real quick. You can see right here, we had 2 deltas that were less than the prior bar's delta. For instance, 103,000 delta is less than a positive 182,000 delta, and a negative 152,000 delta is less than 103. So if we would have taken out the low of that candle, that would have triggered the sell signal to the downside. We have a very similar thing setting up once again. We come over here and we look at this. We had 502,000 on the delta right here. Then on Thursday, we had 251,000 on the delta. That means that the delta declined, even though we were able to push to a new all-time high. Then on Friday, what do we see? We pushed to a new all-time high, and the delta declined once again, actually printing a negative 81.6. So if we take out the low from Friday, that would trigger that sell signal, which could get the S&P 500 coming down and trying to test some of these targets, either the high volume area on the composite profile or this swing point right over here, or maybe even one of those Fibonacci retracement levels. Now, when we come over and we start looking at the futures markets real quick, what do we have over here? We've been able to push to another new all-time high. Look at value area high on the weekly. That comes in at 6,110.00. The point of control will come in at 6,096, with value area low being down here at 6,064. Now, something we were talking about on the live streams was this minus development area. This has my attention. Now, that really is going to be anywhere from the ballpark of 6,076 down here to about a price point of 6,067. Anywhere in that area should act as a magnet, attracting price back down there. Now, we still have 2 prior weeks where we have closed outside of value and we have failed to come back and test those levels. I still think it's highly probable in the near future that the market could make it down towards those areas. Now, if you want a way to support the channel and you trade with prop firms like Apex, My Funded Futures, or even Take Profit Trader, use the links in the description box down below. Now, if the market is going to make it down there, what is going to be the news catalyst? On Monday, we have no major economic news. On Tuesday, we have no major economic news. But hold up, on Wednesday, we have the CPI data coming out. Then on Thursday, we have the PPI data coming out as well. And then we're even starting to see articles like this: why Powell and the Fed should pause interest rate cuts come December. If we look, we're only 10 days away from the next FOMC meeting. And right now they're pricing in an 86% chance the Fed will be cutting rates by a quarter basis points. But what if Powell does do what this news article says and basically pauses on cutting rates? Is that going to be a negative out here for the stock market? Let me know your thoughts in the comment section down below. Now, something else that's also suspicious as well. On Friday, when we look at the sectors across the board, we were able to make a new all-time high in the market, but notice we only had 3 sectors in the green. Every other sector was in the red. Once again, that does not sound bullish to me. Then when we couple that and we look at energy being the laggard out there, look at crude oil continue to melt down. After the inventory numbers that we had out here last week, crude oil should have actually been moving up. This is showing us we have a demand issue in crude oil, aka the global economy is in a slowdown. When we come over and look at the dollar index, we see the dollar index could be setting up a head and shoulders pattern. Left shoulder, head, right shoulder over here. But on Friday, we actually had an up day for the dollar index. We do have a wick on the bottom of the candle, a wick on the top. And right now, the MACD indicator on the daily chart is crossed to the downside. Now, with a stronger dollar, normally we're going to see gold actually being weaker out there. But on Friday, that simply was not the case. We have a hammer candle on gold as well. And will gold make it down, fill in this gap? We are still in a wait and see pattern. Will we break this lower swing point here, the upper swing point up here, or both the lower swing points down lower, which could set the stage for much lower prices? In the meantime, we got to hurry up and wait. And at some point, this pattern will break. Now, we come over and look at the QQQs real quick. On Friday, making another new all-time high. Coming up here, smashing that ABC target up here at 526.09. Now, if we look at the 9 count for the NASDAQ as well, we can see we went slightly higher, but somewhere in this area, we should see a consolidation or a pullback in the very near future. Some of the things driving the NASDAQ have started to change. For instance, NVIDIA was the high flyer out there, and on Friday, we saw NVIDIA actually going lower. But look at Tesla, an absolute rocket ship on the way up. On Friday, up $19 on the session, up 5.34%. Massive, massive move out here in Tesla. We also saw Meta moving up on Friday as well, making another new all-time high. We saw Amazon making another new all-time high, up almost 3% as well. And when stocks are rallying up and all you hear is new all-time highs, people start to get complacent, thinking the market will never go lower. Then we come over and we start looking at the NASDAQ, for instance, on the weekly chart. Notice, what are we doing? We are closing above value area high, which comes in at 21,508.50. We have the point of control off the weekly down here at 21,221, and value area low is way down here at 20,940.00. Now, we did have a relatively large range, 729 points. The prior week, only 406. The week before that, 523. Now, we do have some key levels to focus on. We have multiple minus development areas. I'm going to go ahead and zone each one of these out. The first zone would be up here about 21,587. The bottom of that zone would be 21,560. Now, since we did close outside of value, I will be expecting the market to come down towards that level, especially if that sell signal is triggered on the S&P 500. We'll probably see the NASDAQ coming down as well, and that would make sense. Go ahead and take out that untested value area high. Now, the secondary target I would want to focus on would be the next minus development area, which comes in anywhere from about 21,375 down here to about 21,262. Now, is this going to be induced by the CPI data or even the PPI data this week, as maybe traders start to rethink the possibility that maybe, just maybe, Jay Powell will not be cutting interest rates out here? Now, when we come over and look at the Dow Jones real quick, the diamonds, what do we see? You can see that rolling effect. We look down there at the MACD indicator, just about to give us a bearish cross to the downside. Now, will it just be a little cross and a kiss to go back up, similar to what we saw over here? Or is it going to be a more meaningful pullback? When we zoom this out a bit, we still have not hit our ABC projection up here at 458.13. We look on the 4-hour chart, MACD indicator already crossed to the downside. And to me, it looks like it's eyeing this key level at 443.12. Will it be able to make it all the way back, potentially fill in the gap? Now, as we look at the volume profile levels, notice value has now shifted lower for the last 2 days. Value area high is lower than the high from the prior day. The value area high on Friday was lower than value area high from Thursday. The point of controls have also been shifting lower. The value area lows have also been shifting lower, but there is a warning sign. We are well below the zero line. MACD could be about to firm up, maybe to get us another bounce out here. Now, if we come over and we look at the small caps real quick, the Russell 2000 was able to come down, essentially filling that gap. That's one of the targets we've been talking about. Also, the MACD indicator now on the daily chart is crossed to the downside. We look at the 4-hour chart, just trying to make our way down towards the zero line, and we can see that divergence playing out. We had the MACD peaking out with a high right over here. As price came down and was able to overthrow that high, look at the MACD indicator, simply was not able to confirm those new highs out there. Then as we start to come over and look at the 1-hour chart, we are down by the zero line on the MACD indicator. And on the 30-minute chart, we've already had a bullish cross. But will we see this week that that price comes down, makes a new low, and maybe, just maybe, we set up some type of divergence play out here for the Russell 2000. Now, if you guys trade with prop firms, you want to learn how to track your drawdown within Trade of 8, make sure to watch this video right here.